Hi, it is Alessio. Hope you're well. Wow, what a start to a week. As I'm sure you're probably aware, the markets are down quite considerably. And in fact, as I'm sure you're also aware, for some weeks now I've been warning of a potentially big drop in the stock market and likely increasing risks of a volatile correction and drop in the markets. And by the way, I repeated these warnings even as the market was rallying higher here. By the way, many people ignored these warnings. I'll talk about this in a few minutes. But so far, we've had quite a volatile drop. As I'm making this video, by the way, the markets have already taken out. The S&P has already taken out the lows it made back in June. This is a 24-hour S&P chart. And yeah, it doesn't look good right now for the stock market. So we'll dig into this chart and I'm going to explain to you what this particular chart over here means and this data, and also this chart over here and what this potentially could mean for the market. And we'll also talk about this chart over here as well, what this potentially means. All right, guys, join me. All right, guys, welcome back. And as I'm sure you're aware, the stock market has wiped out weeks of gains. So it comes as no surprise to you, I'm sure, because if you've been watching my previous videos, you know that I've been warning about this for some time. So you can see this big drop here in the S&P has essentially wiped out all these gains, predominantly all these gains that were made here that people were jumping into. By the way, despite all the warnings that I gave in my videos, and I repeated these warnings, it doesn't matter, guys, because people were jumping in, buying into the stock market, buying into Nvidia, buying into Tesla, buying into all kinds of stocks out there at the worst possible time, despite all the warnings that we kept saying in our videos. Now, I know you're intelligent and sophisticated people, and I know you were listening to my warnings, but let me just say this. There are many people out there who were not paying attention to any of the warning signs and the repeated points that risk was increasing in the market. Now, I'll show you those charts in a few minutes. But let me say this. Some of the comments I was getting, and I'll put the comments for you so you can see it. Some of the comments were they're getting all in the market. Some people were saying that they were buying into the market. Some people were saying, nope, the S&P is just going to keep going to 6,000, 7,000, so on and so on. Well, where are those people now, I wonder? Well, they're underwater because they did not pay attention to any of the warning signs I gave. Let me just show you this. By the way, I know some of you say, hey, Alessio, why do you keep going back to your previous videos and mentioning what you said back in your previous videos? The reason why I repeat something in my previous videos is we can learn something from the market because it was giving us early warnings that are repeated many times. For example, this is a screenshot of my video back from the 14th of July. And if you recall from that members video on the 14th of July, here's what I said about the extreme overbought conditions on the RSI. So let me play for you very briefly what I said back on the 14th of July in the members video. We'll come back. And this happens very rarely when you see an RSI on the S&P getting above 34. In the past, usually when this occurs, the odds increase of a pullback, some kind of a correction or a significant correction. If we start breaking down below support, like breaking down below this regression channel near 5,550, that would be the first red flag. And then if we start breaking down, especially if we start breaking down below 5,446, then the odds increase even further that we're likely topping here and we're going to start a major correction and drop. Once we get a confirmation of a drop below 5,446, this support, then indeed, yes, we could then see a significant drop. Once we get a breakdown below this, then we could see a significant drop down into 5,327 and 5,261, these levels of support, and potentially even lower, yes. All right, guys, so as you heard in that members video on the 14th of July, and in fact, let me show you, this is the regression channel on the chart of the S&P, and we can see we broke down below that regression channel about 5,550 approximately, and yeah, that increased risk significantly. By the way, it also took out the 5,446 level here as well. So guys, we've been expecting this drop. This came as no surprise. If you've been watching my videos from the previous times, then it should come as no surprise to you. Very beautiful drop so far, and I think we're beginning to see the signs of panic set in finally, because we haven't seen that much panic just yet. You might be surprised at that. Let me show you this also. Now, I mentioned this in the member video on Sunday, just yesterday. And if you haven't seen that, go ahead and watch it. But at the time, yesterday, we were resting on the 21 weekly moving average. And I mentioned this warning in yesterday's video. By the way, this magenta dashed line right about there, that's the 100% projection of the decline we had in 2023. So from the summer of 2023 to the lows we made here in October last year, if we do a 100% projection of that from the high we made here, that gives us this magenta line. So that would be a 100% projection of that at 5,166. So if the market keeps pushing lower, that's the next level that might get tested. In other words, if 5264 does not hold the market, that could be the next level of support. 5166, near that 34 EMA on the weekly time frame chart. All right, guys, thank you for watching that. So what I was essentially saying was, by the way, in a few minutes, I'll discuss this stochastic RSI here as well. But before we talk about that, let me show you, based on the 24-hour S&P, let me just show you that. Let's go on that one. There it is. So as you can see for yourself, based on a 24-hour S&P chart, and by the way, when the S&P actually opens, when the S&P cash opens, you'll see it'll be very near this level, the 34 weekly moving average. So we've now broken down below the 21 EMA, and as anticipated, we've now come down to the 34 EMA. Okay, so this is another important support, again, symmetrical projection. Now, before we continue, I've got some important charts I want to show you in a few minutes. Let me just address a very important point. Some of you said to me, well, Alessio, your warning came a bit early. So the market continued to push a bit further higher after I gave my initial warning. But guys, as I'm sure you're aware, and I think if you're experienced in analysis and in trading, then I think you'll know this. You don't actually need to know the exact high, the top, in order to protect yourself against risk. Let me show you this chart. It seems to me there are some people out there, again, these are usually probably inexperienced people in trading and analysis. Some of them are trolls. But essentially, guys, there's some people out there who mistakenly think that you have to know the exact top and the exact bottom of the market. In fact, I think these guys believe that the job of an analyst is to get the exact top and the exact bottom. Guys, let me ask you this question. Do you think it's necessary for an analyst or trader to know the exact top or to give you the exact top and the exact bottom in the market? No, absolutely not. As I'm sure you know, the job of a good analyst is to be on alert when risks start to increase significantly. All right, guys? So sometimes you're not going to get the exact top. That's not the point. And sometimes you're not going to get the exact bottom. Let me say this, guys. The only way somebody can get the exact bottom and the exact top is by sheer luck. All right, guys? And that is not even necessary. So please, please, I urge those of you who think like this, and I know there's some people out there who think very childishly, very naively, that analysts and traders must catch the exact tops and bottoms. That is ridiculous. Let me give you an example of this. Let me show you this. You probably remember back in the year 2020, at the beginning of the COVID crisis, when that major crash occurred, at the time, I'm sure you remember this, I was warning of potential capitulation as the market was dropping here. Okay? In fact, there were significant signs of capitulation here based on the acceleration extremes on this chart over here. Okay, and I was warning that yes, we're reaching capitulation, but the capitulation does not mean the exact bottom, but it does mean we're reaching potentially a bottom in the market. And yes, my warning of capitulation in the market came a bit early. But ask yourself, so what? Does it matter? In fact, guys, it does not matter at all, because as you can see, the market very soon afterwards reversed direction, started an uptrend, and then rallied significantly higher. And of course, as the market began to start an uptrend, I began to buy more aggressively here. So the bottom line is, guys, that it doesn't matter. We were reaching capitulation at that point based on the extreme warning signs we were receiving. And yes, that was the right thing to do. I was right to warn of a potential capitulation, even though we didn't get the exact bottom, okay? And the market rallied higher. So again, remember, guys, we don't need the exact bottom. Okay, and here's another example. Back in 2018, I was warning that the stock market is reaching extreme overbought, overbullish conditions, and this is an extreme point of risk. In fact, we can see the first warning sign that came here, based on the red extreme acceleration signal there, was not the exact high, but we were right to warn of a potential top in the market. And you can see pretty much what happened afterwards. Then the market crashed significantly. So again, ask yourself this question. Do you have to know the exact top and the exact bottom, which is, again, impossible to know? No, you don't have to know that. But it's the correct thing to do for an analyst to de-risk, to reduce risk at the appropriate time. But guys, I know that you're intelligent and sophisticated people. I know you already know this. But again, just some people out there who are very naive, refuse to learn. And by the way, guys, let me give you my opinion of those trolls on social media in the words of director William Friedkin.
I don't give a flying into a rolling donut. Is that an answer to your question?
All right, guys, as far as the markets are concerned, the futures, as you can see here, are down below the 100 EMA, as I showed before. I think we're very close now to the 200 SMA. So I think we're probably targeting that level on the futures, the 200 SMA here. I think we're probably going to be heading towards that level. And this is the thing I want to show you here. Now, obviously, the market has not opened yet. So the S&P cash has not yet opened as I'm making this video. It'll be open in a few hours, probably by the time you're watching this video. I don't know if the S&P cash is going to go straight to the 200 SMA, but it might do that. We'll see. But it's probable. Okay, so that's something I'll be paying attention to. I think 5,100 is likely, but obviously when the market opens, we're going to gap down. We're gapping down. I think we've already taken out the June lows here. The fact is, though, I think the market has potentially more downside, and here's why. RSI, 14 setting. Notice it's not oversold yet. That's one thing I pay attention to. RSI, 14 setting in yellow, that is not oversold. At the moment, as I'm making this video, I think it'll probably become oversold sometime this week. So that's something to watch out for. So I'm waiting to see if this RSI 14 setting is going to go down into the oversold conditions. By the way, remember, oversold does not mean bottom. Sometimes markets can become oversold and they can keep pushing lower. So remember, just be cautious. Oversold on the RSI does not necessarily mean a bottom in the market. The markets could continue to push further lower even after oversold conditions. Just bear that in mind. I'm also looking at the 21 setting of RSI. That's also useful. So again, if we get a 21 setting RSI oversold, that can be very useful as well. So watch both of these, 21 setting and a 14 setting of RSI on the S&P. Let's see if those levels get oversold. In other words, below 30. By the way, notice one more thing that I warned about this. You may remember I warned about this in a video before, that we had advanced warning of something bad happening when the markets took out this trend line resistance, and notice it fell back below it. It fell back below it. And I warned at the time, you probably remember in that video a few weeks ago, that when the market does this, when it goes above a trend line and falls below it, that's an early warning sign something isn't right. The other thing I want to talk about here is this, is the weekly chart. And the thing you want to watch out for is this indicator on the S&P cash, not the futures, but the S&P cash. Okay. And the thing I want to watch out for is to see if the RSI, the stochastic RSI, I beg your pardon. I want to see if the stochastic RSI, this indicator here, is going to go into oversold conditions. So what I'm waiting to see is whether the stochastic RSI here is going to move into its oversold condition. Hasn't happened just yet. As you can see, it hasn't happened just yet. Again, remember, this is a weekly time frame, and I need to see how the week closes. All right? Not intra-week, not during the week. So if by the end of this week, the stochastic RSI is oversold down here, again, below the 20 level, okay, that would be a good sign, a positive sign that we're getting oversold. Hasn't happened just yet. Look at this, for example. This happened back in April. Notice the market dropped back in April. Okay, stochastic RSI went to its oversold condition. All right, and what you want to watch out for is, again, remember, just because it's oversold does not mean it's a bottom. Sometimes markets can become oversold and price can keep pushing lower. So be very careful. Again, oversold does not mean bottom. All right, be very careful. What you want to watch out for is when the market becomes oversold based on the stochastic RSI on the weekly time frame, then wait and see if this stochastic RSI pushes above and goes back above the oversold territory. Like, for example, goes back above the 20 level. Because that actually could potentially indicate either a bottom or a likely bounce. And notice, after the market came out of its oversold condition here, right about there, then the market managed to bounce nicely higher. The S&P is not yet oversold based on the stochastic RSI on the weekly time frame. We're getting there. And I think by the end of this week, potentially, I think once the market continues to push further lower, I think the stochastic RSI could likely be in its oversold condition. And then I want to see it stay there. In other words, just like it happened here in the spring, I want to see it close within oversold conditions for at least 1 week. Okay? And then let's wait and see what happens in the market. Will we get a bounce or not? Okay? And then, very importantly, it's really important. And then what you want to watch out for is wait and see after it gets oversold. After it gets oversold, okay, then wait for the stochastic RSI to push back above the oversold condition, above the 20 level. That actually would increase the likelihood of some kind of a bounce or maybe even a bottom. By the way, I should just say, I think despite the drop we're seeing here in the market, a bounce is probably coming. Because as you can see, on the futures, we have a gap right about there that probably is going to get filled. And on the S&P cash, again, the S&P cash has not yet opened, but if we just zoom in here, we can see we've got a big, massive gap right there that has not yet been filled. This gap right about here. Okay, so I think these gaps are probably going to get filled at some point in the next few weeks by some kind of a bounce. By the way, guys, one other reason that I think that we might push further lower in the stock market is because of the dumb money sentiment. Okay, this is dumb money sentiment based on money managers. As we know, money managers are by far one of the biggest dumb money out there. So money managers, by the way, guys, are not yet panicking. Now, this data is as of Friday. That might change sometime this week. Let's wait and see. But as you can see here, money managers are not afraid or panicking at all. And by the way, the comments that I read on social media last week showed, despite the drop we had last week, people were not panicking just yet. But I think we're beginning to see a panic probably soon, sometime this week, maybe the next few weeks, as we head into September as well. Let's see what happens. But the bottom line is, guys, that again, look at this. Money managers' sentiment is still not pessimistic. They're not panicking just yet. I think once this gets as low, I would like to see the sentiment to get as low as it did in the spring. For example, near these levels, or even these levels, beginning of this year. So we're not there just yet. The trolls on social media who've been calling me names, ridiculing me, mocking me, and I'm sure they'll continue to do so in the future. Who cares? All right, guys, these guys have not yet panicked, but they will panic. By the way, some of you asked me in the previous video that at what point would I consider getting back into the stock market? At what point would I consider getting bullish on the market? Now, I'm not there yet, okay? But these are some rules I put down here for you. These are not all the rules, but some of them, some of the more important ones. So I would say, very important, I would wait until the markets are oversold. We're not there just yet. So before I consider getting back into the market, okay, before I consider buying into the market, and not just yet, I would need to see oversold conditions on the S&P. Okay, divergences, positive divergences on lower time frames. We haven't got that just yet. Sentiment, pessimistic. We haven't got that just yet. Okay, I would need to see the beginning of an uptrend, like a higher low, higher high on a lower time frame. Okay, like a 60-minute, 4-hour chart. We haven't got that. An impulsive rally. We haven't got that. A resistance break, a near resistance break. We haven't got that either. So guys, none of these conditions have been met yet. None of them. Okay, the markets are not oversold. We haven't got divergences. We haven't got pessimistic sentiment, and so on and so on. So at this moment in time, I'm not willing to get bullish just yet. But I think we could get there maybe sometime in the next few weeks. Let's wait and see. The bottom line is, guys, I don't think we've reached the bottom just yet. Okay, let's wait and see what happens in the next few weeks, and let's see if those conditions that I mentioned in the video get met, okay, those criteria. But there's one thing I want to mention here, which is that there is a probability that the markets may have topped for the longer term. It's a probability, okay? It's not being confirmed just yet, all right, guys? But there is this risk that the stock market may have topped for the longer term, especially based on what we're seeing here, the big drop that occurred recently with the futures taking out the June lows, the May-June lows here, as we can see right there. Okay, we've taken that level out. So the risks and the probabilities are increasing that we may have formed a long-term top in the market. So the question is, how can we have a high probability that the market's going to form a top, a long-term top? All right, guys, both in the daily time frame and on the weekly time frame. Well, guys, go ahead and watch the members video that I made yesterday. In yesterday's members video, I've gone into detail on the stock markets about how we can know what kind of pattern to look for before we can know with a high probability that the stock market's topped for the longer term. Okay? Remember, the confirmation is not there yet, but I've explained in yesterday's members video how we can know. Go ahead and watch it. Thank you very much indeed, guys. I look forward to seeing the next video update. Bye for now.